Oh, so what I'm doing, this is going to be a video mapping out potential trade setups for the oil trade. Um, Marking up the CL chart, CL1 chart. That's my uh, that's my main chart for my wave counts. I think what I'm gonna do on this one is I'm going to actually use the MCL one. Now this is the contract for the the micro futures contract, not the mini. Uh, so there's a discrepancy or a difference between the price on the micro contract and the price on the actual a mini contract, the CL. Let me get one. See if I can get this pen to work right. Might have to get a new one because this has not been functioning properly. Let me see. See, see, it won't show up over here. Oh, there we go. See, it shouldn't take that long. Okay. Anyway, but the MCL, that's the micro contract. The CL, that's the mini contract. Right now, they both got the same closing price, but throughout the day, intraday, sometimes these numbers don't be exactly the same um, on the closing basis. It's minor, but when it comes down to actually placing the trade, we're going to be placing the trade on the MCL. So whatever broker is being used, it'll be on the micro contract. So unless I'm gonna use the micro contract, and I'm gonna step back and I'm gonna just talk about what type of pattern I'm seeing. And right now I'm on the 4 hour chart. Talk about what pattern I'm seeing from basically the start over here, the start of the impulsive move up, and then the pull back down, right? And then what's to come, right? So I'm gonna put a wave count on this, and then what we want to do is narrow down this section over here. How is price going to break out? Once it's ready, and then by getting different counts, different possibilities, different. We'll have multiple entry options. Because again, now I got this as a triangle, right? But this thing, even though I'm expecting or wanting for it to bounce off this trend line and then come back down for better entry, we may end up getting a breakout here, right? And then, that would change the count. It would change the larger degree count, right? But nonetheless, we are looking for some type of breakout, whether it pulls back or whether it heads higher from here. If it does break out from here, we'll have different types of trade entries because it could break out up here, then come back and then test and then go. It could come down here, right? Entry here, risk here or there, and then it can go, right? But either way, this thing is getting ready to break out at some point here in the near future. Um, so we're looking at different types of games. So I want to step back and kind of want to let me see what all I got on here now. So I don't have nothing categorized yet. So let's just figure out what everything is. Price range, that's going to be these right here. So I can put that in price range. All right, you can come back to that. And then right here, this is gonna be my triangle. Uh, so what's what? How do I have this? Okay. And then here's the larger degree, and then my internal. Okay, so we're gonna call this correction triangle. Correction triangle. lock that, and then trend line, trend line, trend line. So these can go in here. That can go in here. This trend line there, that can go here. Fibs, fibs, fibs. This is gonna be my correction. Fibs. And then we call this one. Here, there's a different folder because I'm gonna do a couple different shoots. I thought it. What happened? Why'd everything go dark like that? Ended up clicking the button. What the hell happened? Yeah, I turned something off. Oh, man, it keeps, let me exit. Let me exit. Pull it back up. Damn. Guess I was moving a little too fast. That looks better. But I wasn't on CO2 though. Oh yeah, I think that's what happened. It ended up moving me down to ended up moving me down to the next symbol. Correction triangle. See, I stuck right there. Put it in there twice. Correction triangle. All right, the regression channel. I don't need that. Actually, get rid of the regression channel. All right. So what was over here? So what I want to do is I'm gonna talk through this pattern that I see. Why I think this is a triangle. This trend line can go in there. What is this? Oh, this is time. Let me say uh, just put time. Right. Time range. Okay, I'll need that on here. And this. All right, so put this as key numbers, and pivots. All right. So, oh, you know also what I want to do? I bet you I'm gonna have to. What is this? Manage layout drawings. So these are all the drawings in this layout. Let me save this, and then I want to do this. I want to go create a new layout. I'm gonna call it trap house. What we'll be trapping at. Opening a new tab. Yeah, you can do that for me. All right. So, all right, it started everything over. Uh, I'll add that other stuff later. Let's see. Okay. Well, this lets me start over from scratch. All right. So what we're gonna do is this. We're gonna step back and then we're gonna look at the weekly chart. Okay. So we're gonna talk about it. So this is a weekly chart. So this goes all the way back to where I want to go back to is right the low of a cycle degree wave 2. We were already starting to head up. Right? We were already starting to head up. Cycle wave 3 is in the birth, right? baby stages of developing. So internally, and I'm gonna break this down. Uh, as we started going, this gap right here, this was the Iran war gap. Okay, actually gapped up here, came back, didn't even make it to fill, and then just took off. Right. So then that is the ceasefire high. This is when all of the shorting and everything started happening. This is when everything started. This is when the government started to short. All right. That pushed price down. Right. And then now we're here. So one count is that all of this is a 1, 2, 3, 4, 5, right? And now we have uh this is going to be a intermediate degree wave one, and then this down here is intermediate degree wave two, and then another 1, 2, and then it can do another 1, 2, but supposed to head higher. That's one way. The other way I kind of have this is that this is wave one, this is wave two. And I'm gonna break this down as I add the wave count. All right, wave one, two, and then I say this is all of three. Okay, and then this is a huge wave for triangles, which you end up getting triangles in your fourth wave. All right, and then from there, we're gonna break out for wave five. And in the commodities oil market, especially, you see your wave fives be your extended wave. That may change this time because if this is wave three, on my pen, if this is wave three, this is already an extended wave three from there. So then the fifth wave may get just past that. I don't know. It may be shorter, but I got different measurements on where we can look for different projections. So we'll get to that. But so I'm getting ready to mark this chart up as if this were a wave four triangle. And this one, when I break it down to the daily chart, if I go down to the daily chart, this one is a triangle within a triangle. And I'll break that down here in just a second. But here's a triangle there. And then I think the overall pattern is a triangle. And then we'll break that down here as well. Let's see. All right, so I'm gonna go back to the 4 hour. Okay, now we're gonna start with the 4 hour, going all the way back to where beginning of this cycle degree impulse started forming. And so let me see. I say this is I say this is 1, 2, 3, 4, 5. So this could be a uh leading diagonal. That's what that looks like. Wave one, and then either this is two, all right, or this is a WXY and this is two, right? And then we have another 1, 2. So now we have a nest of some sort, either way, 1, 2, 1, 2, and then 3, 4, 3, 4, and then 5. Again, an extended wave 5. Oh, wait a minute. Okay, hold on. So let's do this. So that would be 1, 2, 3, 4, 5. That would make that a one, if that's what that was. 1, 2, 3, 4, 3, 4. Yeah, and then 1, 2, 3, 4, 5 to finish off. Let's just mark that up. So what I say? So if that's going to be intermediate wave two right here, let's put that on there. So I was gonna start with the triangle. Yeah, I'll go back. I'm gonna start with the triangle. So if I'm still looking for intermediate wave one, then this needs to come down to minor, right? Because this is going to be minor, I'm going to say one, two, one, two, three, four. And then if I'm thinking this is a wave four, a minor degree wave four, so I can make that into a triangle. So start off with minor one, minor two, minor three. No, we're just gonna go to the triangle. All right. I can break that up. I can pick I can pick this apart. I'll do that later. I just want to talk about the triangle. All right. So if all of this is one big triangle and this is at minor degree wave four, so then that means I'm looking for um, it's going to be some type of A, B, C, D, E, and then go, basic. All right. And the rules of a triangle is each wave is broken down. Each wave is a three-wave pattern. B, like this, C, D, E, and then go. So this right here, I believe that all of this is A, right? I think all of that is A. And then this is B, C, and D. And we have an internal in one of the subways, we have a triangle inside of the B wave or the X wave. Either way, the corrective wave. So I'm gonna start at top level first with triangle, and this has got to be at minute degree. So if I think this is A, B, C, I think D may be up here, then E right there. Let me draw my trend lines. Now this is a arbitrary trend line to try to find where the D wave can actually end. Technically though, as long as the D wave ends up being less than, let's do this. It just has to be shorter than the B wave. It cannot go past the B wave. So it can get one tick just below that high and still bounce back down and still be a valid B wave. Then that turns it into what is called a barrier triangle, so to speak, right? And the barrier is at the top, and price always breaks through the barrier. You can also have a barrier triangle where the bottom portion is the barrier, and that means you're going to break down that way. It always breaks towards where the barrier is. All right, so, but this right here is going to be like a guesstimate, a great guesstimate. Trend line. Then we also have a larger one. I drew this a little earlier. Where was it? That gives us kind of tightens in like a nice little zone of where that in there. I had a tighter one. Let me try this one. It wasn't that. But either way, I'm cool with this for right now. Let me do this. This is going to be correction triangle. These things on there too. All right. So this is the top level. Let me do the bottom trend line. And the bottom. All right. And so we're looking for the apex, right? For timing. Yeah, I don't like this one. See, now this is different. I mean, because the micro contract, the wave formation is just a little bit different. But this could be it too as well. So then now what I'm gonna do is this A wave right here If I think all of this is A, basically B, C for the A wave, then this is going to break down. This right here is going to break down into, here's that inner triangle. Let's go ahead and just draw it. Let's just stick it over there. Here's that inner triangle. And this formed in the X wave, right? Because this A wave down is a three-wave move. So this internally breaks down into WXY. Um, see, this is where it starts to, as far as time-wise goes, I'm labeling this a minuet degree WXY, but typical time minuet degree is not going to last. It's not going to go, how many days is this? 115 days. Let's see, how many, what is it? 115, 115 divided by 30. Damn near 4 months to complete cycle degree. I mean, to the complete minuet degree. But nonetheless, these are extraordinary times concerning this war. So uh, degree really don't matter. It's just all about label. Uh, so, and then in here, I got, this will be a sub-minuet degree triangle, sub-minuet, which, but this is going to be A, B, C, D, and then E right there. And then the AC line is the actual, it's the actual trend line right here. And then see how this happens? See with this wave A and wave C trend line, the E wave came right up to it, came right back to it. All right, same thing down that one and then the break. All right, so there go my trend lines. Let's go here. And then each of these subways in a triangle, they have to break down into some form of a zigzag or a three-wave. And that's what we have. Even the main W wave is a three-wave pattern as well. So yeah, that time frame ain't right. ABC, because now I gotta go down to micro. A Oh shit, I did it wrong. Oh no, that's right, that's right, that's right. So then micro, put that A right there. See, these are zigzags inside of a zigzag. Yeah. Yeah. See, that's a whole nother zigzag right there. 1, 2, 3, 4, 5. Boom. Then 1, 2, 3, 4, 5. Perfect zigzag. Then another zigzag. A, B, C. A, B, and a C. All right. For the B wave. And then zigzag right there. A, B, C. And another zigzag. A, B, C. And then this is a double zigzag. A, B, C, X, A, B, C. That's a double zigzag. So that'll be a WXY at micro. So A, B, C, W, X, A, B, C, two zigzags, W, X, Y. Crazy. And then they also had zigzags in them. That's what happens in the triangle. There's a whole bunch of up and downs. And this is where all the shorts, this is where the Bulls and the Bears was fighting hard. All up in here. And then with the jawboning, with the tweets and all the shenanigans. I think they said April 7th was one. Damn, that is that day. In that report that I pulled up that I had, where was that at? Time better than price. Time more important than price. Mainstream recession. AI versus cheap trade. Okay, right here. Timing. Go back up. These were the dates of suspicious trades. And April 7th was damn near $1 billion was bet placed 70 minutes before the tweets announcement of a temporary bilateral ceasefire. So it was already $1 billion of what they could find and see. $1 billion of shorts placed. This is 5 p.m. So this is overnight. April 7th, 1 p.m. right here. No, that's 9 a.m. Where's 7 a.m. 5? Yeah, right here. You had the $1 billion worth of shorts that was just sitting there, big ass block. So any price coming into that zone was being shorted. 4% drop that same day. Wild and crazy. All right, so moving along. So now in this last leg, you got another zigzag. Look, it zigzags all the way down. So this is going to be at your so where. So this is A, B, C. Bam. All right. So that's the A leg down. All right. So now this right here looks like a good impulse. Or we can break this down into another a double zigzag, WXY, A, B, C. So it depends on however this breaks out of here, if this goes up or versus not coming back down to complete the larger triangle. This breaks higher and starts trending higher. You can also count this, come back and redo the count, and then this is 1, 2, 3, 4, and all of this is 5 to complete a wave 1, and then this will be a wave 2. Because zigzags are the start and look almost exactly like a 5-way pattern because it follows the same rules. Okay, but we're going to label this as a zigzag. So what am I doing? And this is going to be, to complete that, this is going to be something. I think I'm going to bump that up though. Oh no, this is going to be, just jump. Is that Big Chief? Anyway, what did I say? 1, 5, 3, 5. I said WXY. This is going to be a WXY at something what? Zigzag. So W, X, Y. Because I can make a case if this is another zigzag right there. So WXY, I can do it. Just for shits and giggles. Then this would be another ABC. ABC, and then another ABC. And this up a little bit. And then I'll take that. I'll take that a Y. Put you over the top of there. All right, so then you can come down, and then over here, this is going to be what ABC. Oops, I got that. Did it again. ABC. You start right there. Now this right here is still in progress. It ain't over until it's over. But as of right now, we're gonna label this as the other ABC going up into D. Okay. Now we're getting ready to get into some trading. So just leave that there right now. All right. And then we'll do another ABC down here. So on you can go in here. Okay, so this is what we got. I'm gonna take this off right now. This is what I think. So we're looking. So now let's get some. Let's let me mark that daily doji. Let me go back and mark some support and resistance. Right. So and you can see here's the other difference. Was this doji, I think is much further down. Let me turn on. Yeah, these can be. Yeah, weeks. All right. And then, oh, those are my micros. All right. I'm gonna mark it anyway on here. We might have a discussion today. So daily doji right there. No, it's the same one because it bounced off there and then went back. So I'm gonna call this one a doji. Make this folder. Oops. All right. So yeah, I'm gonna call this one. Even though I like it to be a little bit tighter, we'll put it right there. I'm gonna call that one another daily doji. All right, so we're getting some kind of just a key number. We'll worry about other support resistance a little bit later. Okay. All right. So let me get my fib out. Let me go ahead and do that. Because right here, I want to measure, I want to get an idea of where this D wave will end. All right. So what I can do is I can measure the length of um, I can measure the length of this B wave and measure the length of this C wave. No, I'm sorry. I'm gonna measure the length of the B wave and I'm going to project it off of the end of the C wave to give me a zone of where this D wave should end. Then I can break it down a little bit further, and then I can take this as a wave A, then B, and then project a little higher. We're looking for the 100% projection of uh, of the length of this wave. All right, so here, and then so measure B, then project it off the end of C, and we're looking for triangle. The triangle numbers, field projection numbers are the 382, 618, and the 786% projection. What we do know is we can't go past the high of V. So that eliminates that one, right? Looking for a triangle. So we can go anywhere between the 382 and the 618. You can see right now price is already past the 382. So anywhere within up in here will probably be what we're looking for. So uh, now once we go past those numbers, then that eliminates this count. Then we'll switch. We'll switch to the other count. So now let me get the now we're gonna measure this in here and look for 100% projection. All right, same triangle. Oh no, this time I want to do 1-to-1, and then I'm gonna add the 786 on there, and then I'm gonna take I'm gonna put the 78. Don't keep this on the daily chart. Yeah, we keep it on the daily part. And then I want to add the 786. I'm gonna take the 618 off because we already passed that. So we can even still, the 127 puts you right at that high. So we don't want it to get up here. But again, we can still even get up here to the 113. That's a good number to look for rejection as well. So, but what I will do is take the 127 off. So I don't need it. All right. So so here's the 618, right? So off this bigger projection. So that link projected over here, right? Then projected up. Here's the 618. The 618 falls right on top of the 100% projection of this. And normally in ABC, a zigzag, that C wave, you're looking for a termination right at the 100. So that falls right on top of the 618. So let me go back. Let me put that other trend line on here. The one that I took off, I said I didn't like. Yeah, that'll do. So let's just say time wise, maybe in this zone, or it could shoot straight up, hit that. Oops, too far. It can shoot straight up, hit that, and then bounce back down. So then what that would, if that does happen, which I can see that happening, as far as looking for the war, all the different events and shit going on. So that just extends, yeah, that extend the time frame. So I'm gonna leave this trend line on for right now. Let me add this trend line back over here. And then let me put these in the correction fields. So we could look at something like, let's say here, and then we bounce back down, come back to here maybe, then go. I don't know. So these are plans. These are there's going to be a roadmap blueprint on different trade setups to get in on this move. Because there is extremely high probability that price is going to move higher. I think that is a safe bet. It's just how does it move higher to allow us to make some money? And what was I trying to do? Oh, I can move this over a little bit. Let me put some. Oh, let me put some time projections on. So basically measuring the same waves in different. I'm gonna do it in different waves. So the first one, we can possibly see the D wave completing around this time, which is what day is this? Tuesday. Okay, so this is the 100% projection right here. This one is the 50% projection, the 618, and then this is the 100. So 100% of the time that it took for the B wave to complete, we're projecting that same time forward off of the end of the C wave. It's called symmetry, right? Symmetry, geometry. All this is just knowing the geometry of trading along with and then getting tight numbers. So 100% projection, I am going to take the 50 and a 618 off. All right. Also, I'm going to do the same thing here. I can extend that. Let's see what the extended time look like. No, let me do this. No. Oh yeah, we do have one right there. So I think that's the 2618. So these are extended time frames. And then that was to come off and then boom. Okay. We got two of them sitting right on top of each other. Right. You can't even see it. That's how tight they are. All right. So we got some kind of confluence right there. So I just measured the time, the amount of time it took for this lower degree A wave to complete and projected it forward. Right. Projected it forward and it's 2.618 times this time frame, whatever that is. Okay. Then I had another one, another chart. I'm trying to remember. There was another good one. Let's see. Oh, for the end of this whole triangle. Let me see. Let me see. Which one was it? Oh, then let me go extend it. I think that's the same. 2618. The 200 is there. Here's the 2618. I can see that. I mean, it does fall right at the edge of that apex. That could happen. I'm gonna leave that on here for right now. And put that in here as time projection. All right, time projection. Okay, so what we do have, we have a target for this D wave, right around this time. Let me move you over here. All right. So now let's just say this is what I like to do. I like to just pretend what if we do get the bounce there, okay, and that is the D wave. All right, let's say we hit it spot on. Then I want to project down where the E wave can possibly go using the same techniques as far as looking for length of the wave. So this time, what we're gonna do is we're gonna take the length of the C wave, and then we're gonna project it off the end of the D wave, looking for a price back down. All right. So projection high to low. And if the D wave terminates right at where we got confluence right here, right at time and price, if we terminate right there, and then I'm gonna put the triangle on here, and now we're again looking for the 382 to the 786. Right, so that's the zone to where let me see. Should I put that on log? Let me see if I put it on log. So this is another difference from the micro contract and the mini contract, because on the what is that, trend base? Go down here. Because if I go back to real quick, save that in Trap House. If I go back over here to the CL, which I have the same setup, the same triangle, we can see where two, what did I do that on? Oh, right here. Oh no, I'm thinking of something different. Yeah, I'm thinking of something different. Okay. Yeah, because it does fall around the same. Okay, just go back. All right, go back to the trap. Back to the trap. Okay, so 382, 618, 786. We can see if we go by the trend line, right? And we look and see if we're looking for a touch of the E on the trend line, right? Here's the 618 back to this trend line. I don't see that going boom, boom like that. Here's the 382 though, right? Here's the 382 crossing the trend line right there, right? So we could see something where we get the B, the D, boom, and then we get some type of three-wave pattern back down here. And look, it is right here by that daily doji, right? Daily doji right there. It's just so that 382 will be just under there, right? Just under that daily doji. It doesn't mean it doesn't have to get all the way to the 382, right? But that will be perfect. And that will be on Wednesday, around Wednesday, September 16th. Wednesday, September 16th. Oh no. So that's projection. So let me go back to the 4-hour chart. All right. So we got a good zone right here. What did I say? The 618 and the 100. So here's a great zone for that D way to terminate. It can be either or on either side, but right around this time, we're looking for a high next week, next Tuesday. All right. So in order to, time is still on our side as far as we're still in a weight game for the triangle trade. Okay, so that's the triangle trade setup. All right, so entry won't be exactly anytime soon. Which now, let's step back and we think about time, right? We're looking for around the end of September, October-ish, maybe. We're talking about the headlines as far as the SPR reserves either running out, getting to that critical point. It's all out and open. Everybody's talking about it. Shit's going up, gas prices going high. That could go all the way out to the end of September. So we see right here, September 29th is the date, is the extended time period. So that will give time for maybe this to continue to play out. It could hit that, then it could keep bouncing, and then boom, right around that time. So now, no exact numbers just yet for the triangle trade, but I will say that once that does, if that does play out, and let's just say this is where our entry is going to be, we will know that right down here is going to be our stop. Okay, so in numbers terms, I'm gonna just do this. This will be the invalidation. because that would be the invalidation point to where, let's say we do get in and then price still, retraces a little bit. We know for the triangle trade, if this is a valid triangle, it cannot go below that C wave. And if price does go below that C wave, then that, we got further problems. Not problem, but oil prices are going to go a little bit further down. Or it's a different trade. Just a different trade. So yeah, so that's the invalidation spot. So I'm gonna put this in here. I'm gonna name it triangle invalidation. And then I'll put this in right there. Now, the other trade, the other possible trade would be is if this is not a triangle and this was wave one over here, that was wave two, then that would mean this is wave one lower degree, wave two lower degree, and then this possibly was a one and a two, and then now we're going into a three, four, now the breakout is getting ready to happen. Now, if that happens, we won't know. Let me just turn the triangle off. If that happens, we won't know. I'll turn the fibs off too. We won't know until price reaches that high, right? To invalidate the triangle. So as soon as price breaches that high, right, we can either look for any little pullback on that, because this is going to be some type of resistance maybe, to where you should get some kind of reaction, maybe back down. We don't know how far of a retracement that you'll get. You have to take on more risk to try to hold that, because it could bounce here and pull back there, right? Or it can pull back right here will probably be the limit. Yeah, because that would be a 1, 2. Then this would have to be a wave 3, 4, and 5. So then our risk will be down here. If you want to take a pullback of that resistance, or we can wait until it breaks that resistance, right? And then come back to retest, right? You still have more risk to take, but a break and retest of that resistance. Now, this will be a breakout, right? A break and retest, that would be a good entry. Because hell, depending on how strong it is, it may not even come back and actually touch that exact number. Then you'll be waiting, right? And then or trying to drop down to lower time frame and try to catch a speeding locomotive that's already, getting ready to take off. So those trades will be a little bit more difficult. So if that is, then that would mean I'm gonna leave the key numbers. So that will give us a different count, right? That will give us our bullish count, and that will be of intermediate degree. This will be an intermediate wave 1, and then this is intermediate 2, 3, 4, 5, and then this is going to be your minor 1 and 2. This would be minor 1 and 2, then 3, 4, 5. Then 3, 4, 5, and then this may end up being wave 1, 2, 3, 4, and then now we're in the 5th wave up. All right, so I'm gonna just call this we're gonna call this the nest for right now. All right. And so real quick, I'm gonna drop down to the 4-hour, and we're just gonna label just this right here to save time. So this was your minor degree wave 1. So then the sub wave is going to be your minute degree. And so this is the bullish. So this is going to be 1, 2, 3. I think all of that is 4. I think that's a 3 down, WX, A, B, C, Y, WX, Y, probably. And then this is going to be your wave 5. Now, this right here is a good look of what you will see in the oil market, where um, typically in the stock market, the third wave ends up being the extended wave, right? So, meaning the third wave usually is longer, much extended, much longer than the length of wave 1. Okay. What we're looking for a technical traditional wave 3 is for it to, it's got to be just slightly longer than the length of wave 1. So a 1-to-1 ratio has got to be right there. And then if that happens, then you can expect for the wave 5 to be the extended wave. And if I pull out my projection tool just to show, I'm taking the length of this wave 1 and I'm gonna project it off the bottom of wave 2, and I'm looking for my wave 3 projections. We see that the third wave just got past the 100% projection, right? Most spot on. And this happens a lot in the oil. Then wave 4. So then now we're looking for the length of that wave 5. And this is how you can project that as well. So if wave 3 is equal to or slightly longer than wave 1, we can project that the fifth wave should be the extended and be 1.618 times the length of wave 1 projected off the bottom of wave 4. So all I'm gonna do is just take this bottom piece right here and then put it on the bottom of wave 4. If you see the circles, right? So this is the measurement from there to there. And then it connected to the end of wave 4, and then it projects higher. We see that fifth wave stop right at that 1618 for an extended fifth wave. So this is what we can see. That's what this is right here. Or to dip back below, I don't know. But this is how, especially if we do get a breakout right here, we can measure where that fifth wave should end. So let me go back to the label. So 1, 2, 3, 4, 5, keep it simple. Internally, we need to see 5 waves internally in an impulse. And that's what we see right there. So this is going to be minuet degree. Right. So this is going to be your wave 1, 2, and then 3, then 4, and then 5. Bam, right there. Let me measure that too, just so we can wave 1 off of wave 2, measured. So the third wave, now this could be considered extended. There's no hard, fast rule on what constitutes as an extended wave 3, other than we like to see it go to the 1618, right? But this thing did push, much further past that 100. So this could be considered an extended wave 3. And then we'll measure. So then we'll do that same measurement here, 1-to-1 ratio, right? So that's what you're going to get. If your third wave is considered extended, right, then that fifth wave usually equals the same distance, roughly, as the length of wave 1. So that's 100% of wave 1 projected off of here, and it's pushed slightly past it. So this is a good valid 5-wave move up. So this is pretty much a picture perfect 5-wave pattern, 5-wave impulsive pattern in the oil market. I have to screenshot that one, save it for the records. All right, so Now 3 waves back, that looks like a real nice ABC pattern. Excuse me, that's gonna be a minuet degree. I'm sorry, minute degree. So that's gonna be A, B, and then this is C. Go A, B, and C, and then we can break this down. This looks like a zigzag. Another A, B, C, with just the C wave is extended. Another A, B, C up, and then another zigzag down. That's textbook picture perfect. Wave 2. I don't think it can get no better than that. So that's gonna be a minuet. So this is gonna be, that looks like a this looks like a expanding B wave, expanding flat for the B wave. And then this is C. We're gonna do another zigzag. That's a 3, 3, 1, 2, 3, 4, 5. It's perfect. Uh, yeah, this is perfect. Other than this could be a WXY, because I bet you this, if I measure this, this is gonna stop at the 618. I bet you. If I do the length of this, and if it is, then I'm gonna label that a WXY. Push past a little bit. But it didn't get to the 100. That's what I'm saying, is because it didn't get to the 100. And then I can call this a three wave. And then if I break this down to the 1 hour, we're gonna see we probably gonna see a 5 wave pattern to right here. The 1 hour, you can say this is 1, 2. You can say this is like 1, 2, 3, 4, and 5. This is 1, 2, 3, 4. No, hold on. 1, 2, 3, 4. 1, 2, 3, 4. I don't like that. I don't like how that cross back over. That could be a valid 5 waves, but this is the future. Um, 1, 2, maybe 3, 4, 5, and then this is 1, 2. I think this is 5, 3 back, 5 up. So we're gonna keep that as an ABC. Yeah, we're gonna keep that as an ABC. I'm gonna go back to the 4 hour. A, B, ABC, and then okay, yeah, now we got another ABC down, and that's minuet degree. A, B, and C. So this is textbook right there. That's a textbook 1 and a 2. And then this one is going to give us another 1 and a 2. Oh, this is going to give us another 1 and a 2. At the what degree is that going to be? So then now we're working on minuet to give us a minor wave 1 and a 2. So then I'm gonna call this one off the low. So this is going to give us a minute degree 1. I'm thinking, well, maybe this was 1 and 2. That could be, because 5 waves up, 3 back, and then now we getting ready to go. That could be 1 and 2. It was just a short wave two correction, this thing, would this be 1 and 2? That would mean this thing is gonna go. This thing is getting ready to bust through that trend line. Let me put that trend line on here, the same trend line. Um, I like this one better. Well, I've already proved that. I'm gonna put the same trend line up here. I'll do both of them. Because we could break out, boom, and then this will be the pullback. That'll be the pullback and then go. So let me break this down. So now we're looking at pretty much everything that happened last 2 weeks from 2 weeks ago, right? So then see this is the spot right here. This is the spot right here that had me thinking that this move up is still a correction because this did not form like a clean 1 and a 2, but it could be that it was another much smaller degree nest, something like 1 2 1 2 and then 3 4 3 4 and then 5. If that's the case, if that's the case, then 1 is going to be up here. And if 1 is up here, we still might get a bigger pullback at that as well. So that's what we have to be aware of. Okay. Huh. That will still fall in line. That will still fall inside of the triangle as well, because that would just mean, because if you remember on the triangle one, this was the D wave, right? And we were looking for the D wave to complete somewhere around here, same place where wave one could actually end, right? And if that was the case, if we were to go into a wave two, we would still get a 3-wave correction back down, okay? Which on the triangle, that was the E wave. So I would say the same support and resistance would still be in play. Let me do a projected retracement just for golden zone, just for shits and giggles. So if we did terminate there, pull back right there, 50 to 618, or you could get you a shallow, a shallow wave two retracement, the 382, right there where that other 382 was, right below that daily doji. Perfect. So 2 different counts, the triangle count and a bullish nest count, a 1 2 1 2 1 2, all are sharing the same approximate support resistance zone. So I'm gonna call this nest bids. Then it's trend lines, and all of these can go in here. So I'm gonna leave that retracement. This is just I'm gonna leave that retracement. So let's mark this part up because this looks like an impulse as well. And this is again how a double zig, if this was a triangle and this was a double zigzag, you can see how a double zigzag and a 1 2, 3, 4, 5, 5-wave pattern can look exactly the same. Exactly the same. Follows the same rules, basically. So I think I'm gonna mark that up like that first. So this is minor, so we're looking at minuet. Looking at minuet, and this will be your minuet wave 1, minuet wave 2, minuet wave 3, 4, and then 5. So now let's do some measurements. Let's do some measurements on this 5-wave pattern. See where we can get the 5th wave to terminate, if that's what that is. So if this is 1, 2, 3, 4, 5, I can also see this as 1, 2, 3, 4, 5, 1, and 2. And then now we're in the third wave of minuet of minute degree is already in process. I'll mark that up next. So let's just measure. We can already tell if this is 1, 2. Hell, this could be 1, 2. So 1, 2, 3, 4, 5. I think I like that. Oops, I like that better. I like that better. Because that is 1, 2, and then 1, 2, 1, 2, 3, 4, 3, 4, 1, 2, 3, 4. Let's measure that because that's that's a valid 3 waves up. So 1 and then 2, and then we're looking for a wave 3 projection right to the 1618. Do this real quick before I forget. I'll keep that on hours. All right, so this wave 3, that's what that is. That got to the 1618. So then we want to see the 5th wave should stop around the 100% projection off for wave 4, somewhere about that, but it pushed past it, right? And it got to the 1618. You don't, it's not typical to have 2 extended impulsive waves in the same impulse. One of the 3 is going to be the impulse, but this one right here gives us 2. So the odds are that either this is not 1 and 2, and then that puts us back here to the 1, 2, 1, 2, 3, 4, 5. Then that's 1 and 2 and 3. Which one do I like? If I go down to the hourly, see down here on the hourly, see it, and this is why this piece right here is what messed up. Because originally I had this as a triangle because I thought price was going lower, right? Because I had some targets lower, and I thought this was an inverse triangle, and then it was going to break down lower. Now, this is the hourly chart. This looks like a 5-wave pattern up and then down, a 1, 2. But this piece right here, so this looks like a 1, 2, a 1, 2, 3, 4, 5. Maybe like 1, 2. I don't know how that went down there. See, that looked more like a 3-wave, a 3-wave pattern, A, B, and a C. That looks like a WXY. But see, this is a 3-wave pattern. Every which way I looked at that was 3 waves. I couldn't get 4 waves out of 5 waves out of that. I may have to go down. Let me go down to 30 minutes. Go down to the 30 minute. See, even on the 30 minute, there's no clean 5-wave pattern. It's still 3 waves. So what does that mean? That means that maybe all of this is wave 1 and then all of that is wave 2. Hmm. Even though this low didn't take that low out, then that turns this into a W, X, and a Y. So now we got wave 1 and then wave 2. And then look, this looks like a real nice, decent 1, 2, 3, 4, 5th wave up for another 1 and 2. So that's what I want to do. So 1, 2. This is an ending diagonal right there. Uh, um, yeah, with an extended wave 1, 2, 3, 4, 5 with an extended wave 1. So that's an extended wave 1. Oh, I'm sorry. This is a oh, yeah. So when I do it like that, 1, 2, 1, 2, 1, 2, 3, 4, 3, 4, no, 3, 4, 5. So higher degree, lower degree, or is all of that still 1? Could this be 1, 2? No, because that's not 5 waves in here. All of this is 1 impulse of wave. The 1, 2, I'm not gonna have an extended wave. I'm not gonna have an extended impulse. I'm not gonna have an extended impulse going into a 3rd wave to make this 1, 2, 3, and 4. This pattern, this pattern right here, that's either the start or the end of something. It's either the start of an impulse or the end to an impulse, a 5th wave or a 1st wave. So that would mean that this cannot be 1, 2, and 3. But that could be this is a 1, 2, 1, 2 at a lower degree, right? So then this minuet will come over here, and then this will be a sub minuet degree. Let me just put that on there and we'll just work it out. So 1 and then 2, but I really like this as a WXY of sub minuet. And that's going to be W, X, and then Y, and then 2 goes there. Let's go W. Put it on there. WXY. This is supposed to be, thought I did an off the low. Oh, that's why. So these two are going to go off the low. Off the low. We'll call this off the low 1. So I'm going to do different counts. Okay. So that's 1, 2. And then this will be at subminuet degree. So that would be, so then this will be 1, 2, and then here's some more subsequent lower degree 1, 2s. So 1, 2, 1, 2, 1, 2. Maybe call this 3, 4, 3, 4, and then I'm gonna need another 3, 4. I don't like that because that's starting to get way too long in the tooth. Unless one of these pullbacks was a real shallow second wave, but 1, 2, 1, 2. If anything, this is a 1, 2, and this is a 3, 4, and then this is 5. But that would have to put all of that in the sub-minuet degree time frame, and those are way too long, big and long. This is one reason. This is one feather in the cap for the triangle. This is, yeah, for the triangle, and that keeps this at a corrective pattern instead of an impulsive pattern. Let me pause. Go right back. All right. Make sure I've been recording this shit the whole time. You think I should have checked that earlier? All right. So where we at? So, uh, yeah, that makes this seem like it's more corrected. But so how do we work out a decent 5 wave pattern? Best thing, best I can see is this is 1, 2, 1, 2, 3, 4. But that is all a 4, 3, 4, and then 5. Or maybe this could be the 4th, but that's just looking at time and price, shape. That that's not equal size to as far as time wise goes. We're looking for a correction around the same time length as this. And if it's a 4th wave, this is a wave 2. A 4th wave will be a little bit longer. Oh, I need to put some more geometry on here. Hold on. See, 17. That this is much larger than that. It still could be in the same family as that for a 4th wave, but that's really starting to look like it's more so a correction to this whole pattern. This whole move up. This looks like the amount of time for correction to correct that whole thing. Again, which leads more to a zigzag, but we're gonna do the bullish one just in case it's not. So if that's the case, then this will have to be a 3 and a 4. And then now we're in the 5, which we're already at. Where was it? Which that's what that could be right now. So let me just mark that up. 1, 2, and I like this as all of one wave. Yeah, I like this all as one wave. Trying to rectify that. Oh, could it be uh 1 or 3, 4, and the 5? Yes, I can see that. 1, 2, 3, 4, and the 5. And then now this is a 1 and 2. This looks like a expanding flat. This looks like a flat right there. A, B, C into your wave 2. Let me put that on there. That would be at subminuet degree. This will be your A, B, and then this will be your C at subminuet. ABC, and this is 1, 2, 3, 4, 5. So this will be at micro level, and then my subminuet. Yeah, this will be subminuet. Subminuet 1, 2, 3, 4, and 5. Yeah, this should be off the low. 1, 2, 3, 4, 5. For your 1 and your 2. So then if that's a flat, then this will be more likely a sharp, which we can say that looked up at 3, 3, 3, 5. But either way, I can trace out 1, 2, subminuet, 1, 2, 3, 4, and 5. See, I don't like that as a 4 either, unless that's a running flat, which it could be. That would meet the rules. But running flats are a little more rare. You do have them, you do see them often, uh, but subminuet. So I can say this is, I don't even like that as a 1, 2, 3, 4, 5. That is a 3-way all day, unless in the 10-minute time frame or whatever, we got a 4th-way pullback. But unless that's 1, 2, 1, 2, 3, 4, 3, that's what that is. Yeah, that's what that is. Okay, so I do like it now. Subminuet. 1, 2, 1, 2, and then 3, 4, 3, 4. Yeah, so 1, 2, 3, 4, and then this is still that ugly 3, 4. Well, it ain't ugly, but a possible running flat. 3, 4, 5. So that gives me 5 waves up to complete wave 3. Then 3 waves back to complete wave 4 at subminuet degree. Here A, B and a C, A, B, and a C. That's a 3-3-5. Yep. All right. And then now that would mean this is the fifth wave. So this looks like a little more where did I draw that on? Oh, that was that. If that was one, then that would be five. So this fifth wave could be over. So let's see if it is. I'm gonna put you. I'm gonna do off the low field. Yeah. All right, off the low field. If that's wave five, where this is that, right? That's one, and then now we could be going in down to wave two. It'll be one, two, then three, four, five. Um, then how do we get five waves out of this? So that's higher than that. So could that be one, two, one, two, maybe one, two, one, two, one, two, one, two, one, two. So that's four. Then three, four. Or is that low? Let me take it off. That low. So that took out that low. Three, four, three, four, maybe. One, two, one, two, one, two, three, four, three, four, three, four, and then one, two, three, four, then maybe one more high and then fall. But then that pushes one over here. So I'm gonna go down two more degrees. So minuet the micro. Yeah. So this is sub minuet, then that will make this wave one, and then this is two, and then this is three, and this is four, and then we're looking for five. So then the micro would be one, two. That looks like another one, two, maybe. I'm gonna go one, two. So that's three, four. Then is this three, four, or this three, four? All of that. I'm gonna just say all of that is three, four. Just keep it simple. Oh, oh, then five. A real short, a real short fifth wave to finish out. So if that's minuet three and that's one and two, let's measure that. I should put on my channels though, which I didn't do that. I'll come back to that. So we are looking for right there at the 1618. So that is an extended wave three. Then if I measure it off of four, length of one off of four, see that push past. That's fine though. I mean, or if I did this, it'll probably stop at the 618. Yeah, yeah, just pass it. I mean, that's valid. That's nitpicking. So either this is five and then one is done, or we may make another new high, because then this could be another fourth wave, because that looked like a triangle. Well, it could turn out to be a triangle as well. This could be A, B, C, D, E, and then boom, finish 5 and then go into the correction. So all of that is a wave 4 triangle. So then that can move the 3 over here, and then that 4. But this looks like a 1, 2, 3, 4, 5. That's what that looks like. So then maybe then it's like this. Or no, that's still 3, and all of that is a B wave. I could see that. This is A down. Yeah, but that did make another new high. But even still, that looked like an A down, B up, and then C down. So all of this is a fourth wave, or this could be something like how did that take place? I'm assuming that went up first, then down. So that's A, B, B. Which one is lower? 79. What does that say? 77. So that's lower. Okay. So maybe this is A, and then all of that is B, A, B, C, X, and then finish off with C. So maybe A, B, C for your fourth wave. 1, 2, and then this gets me up to 3, 4, 5. Yeah, I like it. 1, 2, maybe 3, 4, 5. That looked like a 3 waves though. Well, 3, 4. That's a real short 4 compared to that 2. But I mean, you could squeeze it out. Then another impulse to move up. Let me look at the. I think I do like that. Uh, but what that would mean though, as far as looking for a trade, I think the same thing is still at play. We're still looking for. Let me roll out bigger picture. We're still looking for resistance, either right where we at, and then a drop, or maybe another push up, and then a drop. Right now, it's just gonna be death. Right, so we got lower numbers down here, time frame to where, given that this could be either or, this could be a 1, 2, 1, 2, or it can be the next. Either or, we still got actionable entry zones, right? Somewhere down in here. Let me draw that lower trend line too. Oh, yeah, my lower trend line like this. Come on. And then I'm gonna put you in off the low. This is gonna have to be to find the best, most probable. You have to just watch it, follow it, and then we got entry zones. So for if this is the end of a wave one, we could get a deep. Where was the? I thought I had put a retracement on here. I can take this one off. Let me put a. I thought I did a correction fibs. Did I put it in there? Oh yeah, cause see, this thing can still push a little higher too. I'm gonna just leave that like that for right now. Let's look at. Let's see if we got any gaps. So I think I'm chart is marked up. Let's see if we got any gaps on the daily chart down below. Nope, all gaps have been filled. I've got the dojis marked. Doji. Um, what is this one for? I don't think I need that. What is this in? This is in nest. Shouldn't, I don't think I need that anymore. And then this was, okay, this is what I'm looking for, my triangle. I can take that 786 off in the 382. Yeah, and the 382. No, 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 no. I'm gonna put this in. Did I have a triangle fields? That's what I'm gonna do. I'm gonna put this in the triangle fields. Just in correction. I'm gonna do. I'm gonna do your own folder. Oh no, correction triangle fields. All right. What was this one for? Shit, all right. Oh, I don't need that one. And this is oh 382. Oh, that this one is potential. This is if we got here. I'm gonna take that off for now. I don't need that getting in the way. So where we are right now is we're looking for okay termination there. So and then here's a 618 triangle. I need to label that. To label all this. Let me do that. And then take the 618 off. So look, and then I want to do this. I'm gonna call it. I just want to say triangle, triangle 7, 8. 6. Then I want to label this one. Triangle. So I hope that's fine. Let's see. 618. And then this is triangle 382. That's behind everything. Just make sure that's it right. It's not. Six one eight triangle 786. Okay. And then move you back. And then save that under triangle. Okay. Oh no. Keep it on days. And then I want to take 382 and 786 off. All right, bet. All right. So in this one, it goes in correction triangle. This one, I'm gonna put this in. Yeah. Okay. All right. So now I think I think I'm in now we'll just wait. We monitor time. So I'll come back. No, that's the off the low. Don't matter. Okay. We start over. So we got 2 counts. Yes. And then correction triangle. And then off the low. Okay. So this is it. Yeah. So this is it. So this should go with the nest. Off the low goes with the nest. And then nest fields go down here. And then correction triangle. We'll move that up here. Correction triangle field. Time projections. Okay. So off the low and the nest. Okay. So this is if we already in the end post. I can see this. I don't see this breaking out. I think I got this on here. That's what I need to do. This should be off the low fields. Okay. So 3, 4. What I want to do? That's the 1-to-1. That at least yeah. So if this is a 1-to-1, meaning if this whole thing is 5 waves, then down, and then equal extension up here, this should go off the low fields. I'll figure out what off the low fields, and I need to actually Leave it on days. There's a 618. So we got at least two potential upside targets. Two potential upside targets. We got some good resistance, trend lines, time frame. If this is a 1, 2, and a 3, we got 618, 1618, or even a 100. This could still be 1, 2. Then we get up here and get 3, 4, and 5. Extend the fifth wave. I'd much rather see a triangle because I want to see, because I want to get a good price down here. I don't want to get in a trade and it's, you know, in full impulsive mode, looking to get in. And I mean, it could turn back, it could pull back at any time and taking on risk. Unless I see something clear, if we do get a break and this is a fifth wave or a third wave or some impulsive, if I see a good internal pullback, maybe a like of this size right here, that might be worth getting the entry and just keeping a tight stop, right? Yeah, just keeping a tight stop because this thing it shouldn't pull back if this thing is a third wave or fifth wave or, but after it hits 100, yeah. So if we do break out and after it hits the 100, pushes past or whatever, and then give me a correction, then that could be an entry. Or if it hits the 100 and then gives me a correction, maybe a bigger something. No, it will have to probably be same size if it's going to bounce here and then keep going. Because really any bounce there, we could expect a bigger retracement. It's worth the shot. It's definitely worth the risk. Uh, but I think that's where we at for right now. If I think of another count, I'll come back and do another one. But as of right now, that's where we're at. And it's on the MCL. All right, bet. Trap house.